even though the depreciation is decreasing, they're still not admitting defeat over the last couple of years. Over $2 billion has been transformed into inventories. And so Intel's still wanting to sell what it manufactured over the last couple of years, despite the market repeatedly telling them we're not that interested. Maybe some of this boldness is coming from proceeds from capital-related government incentives. When the government's handing you a check for $1 billion, you don't really feel that much pressure to wind down underperforming business segments. So in conclusion for the opening move, revenue very much evaporating before our eyes. And with that in mind, I want to check out what this sudden increase in inventories is. Hopefully we can get lots of healthy details explaining why this makes sense. More specifically, why we as investors shouldn't be worried. All right, here we go. I have searched for the word inventory, and it's popped up very early on in the item 1, I think, prepared by the investor relations department. And this is looking like the very beginning of the whole report. And so since they're talking about inventories right at the beginning, I'm going to give them the benefit of the doubt and just read the item 1, which I usually kind of skip over for most businesses, solely because the investor relations department typically paints things as positively as possible. But let's give them the benefit of the doubt. Diving in. As it turns out, the use of the word inventory here is actually describing some vague thing about customers. It's actually part of an excuse that the investor relations department is offering. Let's not spend more time on it. I'm moving on. Now in the item 7, this is the management, the CEO's office discussion. Inventory pops up in this paragraph, but this is actually what we were interested in from the opening move. They describe it as increasing the operating inventory in order to strategically locate supply in forward positions. And so a very convoluted, in my opinion, way of promising us that this inventory is not going to show up as a cost in future periods, that it will generate profit, but a very vague and easy to escape promise right here. We've now been scrolling through almost 20 pages of management discussion, quite deep. I don't even remember what section this is in, if I'm being honest, but management now actually revealing some information that we could take away as investors as useful. Right at the beginning of the 2023 season, this company decided to increase the estimated useful life of certain machinery and equipment from 5 to 8 years. This directly leads to the reduction in depreciation expense that we saw in the opening move. And so if you remember in the opening move, I was happy as an investor that depreciation was being lowered. Well, now this little detail making me realize that I was prematurely happy. They did not change anything other than this 5 to 8 years. We'll just keep them for longer if they're not selling now. That is not very reassuring to me. If there's a problem with the business segment, you want to cut that loose and move on to things that actually work sooner rather than later. Management here, once again, as they continue to do year after year, extending a lot of faith into the idea that demand for their products will return again at some point, despite mounting almost half a decade of evidence that that is not materializing. Even worse, as I'm slowly digesting the revelation here, is that the knock-on effect of changing your estimated useful life for your production machinery. They have decided, again, entirely not necessarily what they need to decide, but they have decided that the knock-on effects will be subsequently absorbed into the inventory account. I might genuinely be misunderstanding something here, and I'm open to people explaining it to me. But the only reason to have these machines pass through the inventory account as part of the day-by-day manufacturing process is to buy these investments more time to show positive ROI, instead of admitting that maybe these exact machines are not positive ROI. These might not be successful projects, and that's not okay. I get it, but I'd rather admit that and move on than drag this out for another season, guys. They're going so far as to legally argue that the impact of the useful life change is impractical to quantify on an individual year-over-year basis. This sentence, great to avoid lawsuits, potentially. I won't even say it's that good for that purpose. But as a potential investor, I don't want you to be avoiding lawsuits that I might raise against you. That's not the adversarial relationship I want with my management. This management, using a lot of words, trying to get the majority of their investors to not even notice that the machines they decided to buy years ago are doing very poorly. This cycle for Intel has been largely a big waste. Now, there's still tens of billions of dollars flowing through, so I shouldn't be so mean to them. It's not catastrophic, but I would classify this as absolutely annoying. From our experience last season, I know that the disappearing of demand for Intel products is not just this, but last year they were basically blaming it on Asia. their own middle managers not really believing in the product in Asia. So I have Control F for the word Asia. It's showing up way less this year than last year, which means that maybe that excuse of a narrative last year was more excuse than actual narrative. But this paragraph just reminding us that they have a lot of competition in Asia. Around this, you can kind of read the subtext that Intel thinks it's unfair that so many of their Asian competitors basically have ample government support. Intel, like we saw earlier, receiving billions of dollars of government incentives, but feels that on a relative basis, that's still not as much as some of their Asian competitors. Intel wanting to complain while also giving us this tidbit that really neither of the big Asian competitors have the most advanced products. Maybe this goes some way to explaining to us why Intel refuses to stop believing in its manufacturing product, the products it's currently selling this cycle. Intel genuinely thinks they're just flat out more advanced than the people they're literally losing to right now. Tough situation, and I'm not sure how to take away positives from this annual report. I know that there are some. I know that Intel does do a lot of things right, but it's just tough because the high-level statistics, which we never want to focus too much on, but let's just review them. Revenue down, gross margin lower, earnings per share very down, and cash flows no longer looking untouchable. $11 billion, $11.5 billion, very elite. I know this is a strong company, but after several years of weakening very fast, I just really don't like to see a management not even experiment with the possibility that they might be making a mistake. I don't know if they are, but I can know that they don't seem to be behaving as if that's a possibility. And so not only did the whole decision makers in Asia thing disappeared completely from the annual report from one season to the next, but in its place, Intel now offering us up another completely different story, extending the useful life estimate from 5 to 8 years. But I do need to guess right now, and I'm not feeling very patient after this. You make $11.5 billion in cash flow. I don't think that buys you unlimited patience. Gonna guess that this is between the 70th and 90th percentile. Very low ranking is what I'm guessing. But what do you think? SageSeeds AI does give rankings, and it is trained to identify value investment opportunities. The closer to the first percentile, the better. Tell your friends about it, get them to guess as well, and whichever one of you gets closer to the actual SageSeeds ranking is clearly destined to become a financial sage. Yep, Intel ranked in the 82nd percentile. Apologies, this is looking so dark. I'll fix that for future videos. But 82nd is in that range I said. I'm not surprised. Obviously, the SageSeeds AI knows that you're making $11.5 billion. But with the amount of capital invested into this enterprise, I really expect a management capable of admitting mistakes. It is very likely that we continue to cover Intel in future seasons just because of how important this company is. But ultimately, I